Hi, this is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for Monday's show, Monday, December 14th. I cover three markets here. It'll be March wheat, January soybeans, and February live cattle. Let's just jump into the wheat contract first, and actually I'm going to just show you the newsletter, page 2 of my daily wheat contract newsletter. And you can see I've got illustrated here at the top of that page a long-term weekly chart that is a weekly continuation chart, volume-based rollover. It is the most popular form of continuation chart now because it rolls with volume. It follows the money, if you will. And it reflects presently the March contract. So this rolls from one contract to the next. And right now I have trend-defining support. It's a speed line projected off the 2016 low that we've not tested following the high about a month ago, but we came close to it a couple of weeks ago. I think we dropped within 5 cents of it. It's at 560 half this week, and it's rising weekly. It is our floor of support, and above which this market can push higher. I'll get to some key resistance levels in a moment that would, I think, set the market on a clear bullish path into later winter and so forth. But for right now, our floor of support, 560 half. No good reason to be aggressively short wheat if you play the long game. In other words, if you're looking into later winter, spring, next spring, no good reason to be aggressively short right now until or unless we violate 560 half support. You can actually see also I've got this rounding saucer bottom that's really been in play since 2014 or so. You have the 2016 low, and we've been doing this sort of progressive higher high, higher low. We put out a new high, we fall back sometimes significantly, but nonetheless the low that follows is a little higher than the preceding low, so forth and so on. And this formation, this long-term saucer bottom, I'm going to let that go. This long-term saucer bottom is one that can absorb selling, as I say, through winter and into spring, and above which we can push higher. This is a formation, I'm just throwing it out there for the week itself. We've already tested it Monday morning, 620 and 3/4. It's lost its punch, if you will, on the weekly continuation chart, Chicago Board of Trade wheat. I'm emphasizing Chicago right now because in a moment I'm going to show you a Kansas City Board of Trade wheat that has a similar resistance that's actually holding. But let me just finish this concept. If we close this week, Friday, above 620 and 3/4, in other words, this weekly chart, the market looks good to me on a sustained basis into later winter. I'm then looking for 675 even, roughly, within a month or two. 754 half, as you can see here, is a 3/8 Fibonacci retracement from the 08 high to the 16 low. 754 half, if we can close, let's just put it this way, if we hold above 560 half, I think 754 half is in reach as a summer 2021 high. We would need to clear some certain hurdles on the way up. I think the most notable of which, and I know I'm jumping around here, but it's the KC wheat. This is the Kansas City Board of Trade weekly continuation chart reflecting the March contract in Kansas City. It has its own significant overhead resistance I've been pointing to for weeks now at 587 and 3/4. And so 587 and 3/4 is a ceiling for this particular contract that I've been saying can contain buying into winter, spring of this coming, so into spring. And so, it's not the same exact picture as what we see with the Chicago Board of Trade wheat, which is still bullish by 560 half. I'm just pointing this out, that if at the end of this week, the Kansas City March contract closes above 587 and 3/4, then I think we have a broader based wheat rally on our hands. And so how do I phrase this properly? We are stable to bullish above 560 half in the Chicago Board of Trade wheat. And in fact, I think this market can continue to push higher into summer of next year, possibly yielding 754 half over that time horizon. And on that note, if Kansas City closes above 587 and 3/4 at the end of any week, that's the March contract, then it is sort of, paralleling what we're seeing in Chicago. And so I'll leave you with that. Not until we close below 560 half Chicago Board of Trade wheat at the end of this week, do I see a reason to play the short game. And then I'll show you that what I'm looking at. Closing below 560 half. This is a blown up version of the Chicago Board of Trade wheat. And then I think this market is likely to continue south. And I honestly think 450 to 475 even is in play within, I'm going to say, 3 to 5 months of closing below 560 half, which will put us into spring, early summer of 2021. And this would become a target. But until then, 560 half, solid pullback support, able to contain selling well into next year, and above which we continue making upward gains and closing above 587 and 3/4 Kansas City wheat is actually a buy signal that I'm going to be telling readers about that I think will also affect the Chicago contract. So let's jump into January soybeans. Not a lot to add here. This is old information in that it's about a month old. I've been mentioning it on the show a lot. 1139 even is a floor of support that's long-term in scope. We settled above it about a month ago. And I'm still maintaining a 1376 even objective that I think is in reach over the next 3 to 5 months. In other words, into spring, later spring, planting season of this year. I think 1376 even is in play. On the way up, I've got some resistance levels that can contain buying around 1200 and then 1290, so forth and so on. These are little stair steps. So 1200, 1201, closing above it. Expect 1290 within 3 to 5 weeks. Closing above 1290, expect 1376 even within another 3 to 5 weeks. But this is all true above 1139 even. If we close below 1139 even, that failed long-term buy signal has bearish consequences, possibly into the 930s over the next 3 to 5 months. But I'm giving respect to this ascending speed line this week at 1073 and 3/4. So the way I'm framing this with subscribers is bullish into spring above 1139, even bearish into spring below 1073 and 3/4. And if we close below 1139 even, 1073 and 3/4 becomes a quick 2 to 3 week target, and we could trade inside this 1070s 1130s zone for a number of weeks before the market then tips its hand. And I would say presumably below 1073 and 3/4, because the failure to follow through on this long-term buy signal will have consequences. And I think you should allow for the 930s into spring trade if we close below 1139 at the end of this week. It's just that 1073 and 3/4 will certainly test your patience on the way down if you are short this market. Finally, sorry about that. Let's jump into the cattle market. This is big picture reminder, still constructive above 103 half. This is a live cattle weekly continuation chart, reflects the Feb contract. Will be rolling to April in the coming weeks, but right now is a Feb contract reflection, and still anticipating the 122 handle over the coming months. I still have it as kind of a 3 to 5 month target. It could be much sooner if we get up and over what I see as a meaningful near-term resistance at 116 and a quarter. And this is a February chart, by the way, not a continuation chart. The high settlement is 116.35 on the weekly chart. In this channel top, this near-term channel top, 116 and a quarter. So I'm saying that if we close above 116 and a quarter at the end of this week, which with the reduced volatility looks like a long shot right now, but if we do close above 116.25, then I think we're just about 3 to 5 weeks away from testing this longer-term target at 122.42, where the broader live cattle market can top out into next summer. From here, it can fall south again. What that target would be would have to take a look at that time. And finally, looking at the downside, we also have decent near-term support at 107.50. I don't see this level this week, but if it is tested, it can contain selling through the balance of December trade, and from there the market can stabilize and turn higher into the 116 handle again within a matter of 3 to 5 weeks or so. Closing below 107.50, even on a daily basis, I think we're looking then at 103.50 within just another week or two. And this 103.50 is our base of support, able to contain selling into spring trade, and above which the 122 handle is expected over that time horizon. If we were to close below 103.50 at the end of any week, the market is pivoting south into later winter, the 89 handle then expected within 3 to 5 months. But we're not there right now. A solid support at 103.50 and above which the 122 handle still anticipated. And I've been saying that since summer. And it's getting old, I know, because we've been locked in this consolidated framework. But leave you with this. Closing above 116 and a quarter, I think 122 and handle lickety split. That's really all I've got to say for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.